All right, so it's now recording. All right, so just quickly the email I just sent you, we can just kind of go through that really quickly, just to kind of break down what we're going to do in these 6 sessions that we have together.
Yep.
So today we're going to go over pretty much the basics of trading when it comes to analyzing candles and looking at support and resistance on the chart. So it's really,
Yep.
we're going to be working with the most basic and just start there just so you can get an idea, because we want to just build that platform. So then when we go into more, like deeper, difficult things, that you understand it from coming from the basic of just the candle and what the candle is trying to tell you and the trend that it's going to and things like that. So,
Sure.
so that's where we're going to start. And if you have any questions as I'm speaking or going along, please feel free to interrupt me, and I will answer anything you have.
Great.
All right, so I wanted to try not to pay attention to some of like the indicators or things that I have on my screen. I can
Okay.
actually get rid of them here so then it's easier. So let me just get rid of these. Okay, so we just have the volume at the bottom, which is fine. All right, so this is a simple chart. I picked Apple just because I don't have it all marked up like I do some of my futures charts, but we will be looking at futures charts when it comes to us actually kind of looking at market depth and going into detail of the charts. But for now,
Right.
since we're focusing on candles, I didn't want it to be too messy. So I just wanted to pick something. So this is a chart of Apple. This is
Yep.
on a 5-minute. So there are several different time frames, and that's one of the things we'll go into in the future about multi-time frames. But what I use 15-minute, 5-minute, and then 1 hour most often. You'll find the larger trend on the 1 hour, but then you want to break it down so then you can kind of see what's going on in a more like micro sense. And
Yep.
the 5-minute gives a pretty good idea, and then the 15-minute I find to be pretty helpful. So this is a 5-minute chart, which just means, and if I'm saying things that are really basic, you can let me know. Like, I know you know some about trading, but I don't know how much you know, so I'm just going to be really, really basic. So
Yeah. That's some perfect perspective.
Okay, good. So each candle represents whatever time frame you're on. So right now I'm on a 5-minute time frame. So each candle is representing the buys or the sells that are happening in that 5-minute time frame. And you can always see the time at the bottom. So if I'm moving my cursor and I move to this one, then it says 9:35 at the bottom. So
Yep.
each candle is just giving you information that happens within that time frame. So within these 5 minutes, you can see that it moved quite a bit and the candle closed red. So when a candle closes red, that means that there's more sellers than there are buyers. So in
Yep.
the market, the only thing that moves the market are buyers and sellers. So people thinking that the market's going to go up or that this product is going to go down is what's going to move the actual product. And so when you look at a candle, you just kind of want to assess what it's trying to tell you. And this candle is obviously telling us that a lot of people are selling. And you also just need to understand where the candle starts, where it ends, and kind of what happens in the middle. And so I'm going to show you that too. So when a candle opens, so the candle opened up here. So a candle will always open at the top of the body.
Yep.
And then the wicks that you see are the highest and lowest point in that 5-minute time frame or whatever time frame it is. So
Okay.
it opened right here, and you can also see this information up here on, like, at least this is in Thinkorswim, TD Ameritrade, but any software will really show you the open, close, and then the high and the low. So if you see at the top here, the open was 269.2. So that is right here, and 0.20, whatever. And then what happened within this time is, since it's a red candle, we know that it closed lower than when it opened. So it closed down here. But in the meantime, it went to this high, and then at some point it went to this low, and then it closed here.
Oh, okay.
Yeah. So when you see a candle, so when it's a green candle, it opened here. It may have gone all the way down first, and then it opened here.
Yep.
Because you just have to think of it in the opposite. So where it opens, whatever color it is, then it either opened at the bottom or at the top, and then it closed, saying that obviously the overall color of the candle, that's where it closed. And then the wicks are just an indication of area that it was in an area for a small amount of time. So like with this big red candle, most of the buying and the selling happened within the open and the close sections. That's why the body is filled in like that. When you have the wicks are just where people did trade, but it's a small amount of trading.
Okay.
So that's why that will become important when we look at some other candles, just to kind of give the story of what's going on in that time frame. So if we go to the next candle, like I said, so it opened up here because this is where this one closed. So it opened up here. It may have dipped down for a little bit at first, but then it recovered and it went all the way up here, and then it closed right here at this level. And then that's where the next candle picks up. So they're really just a continuation of candles going to the next one, and then depending on the color, how it closed, then you can understand kind of where the body started and then where it stopped, and then the wick is just extra trading space. So when we're looking at candles, we really just want to kind of understand if we see the story that they're telling. Obviously, if you have consecutive red candles in a row, then you can tell that the sellers are in control and they're pushing the market down. So in any candle that's red, there's obviously more sellers than buyers, and the candle that's green, there's more buyers than sellers. But you can't really see a trend or guarantee something's going to happen with one candle. Even sometimes with a few candles, you might think that it's going to go a certain way, but then it might hit an area that we call like resistance, where there are a lot of people that are looking to buy. Like here, you can see a lot of times it tried to touch down in this area, but then it moved higher because there were a lot of people sitting in this area, maybe big banks, maybe people that just said, hey, I think $264.70 is a good price to buy Apple. So I'm going to sit down here, and when it gets here, I'm willing to buy it. And that's why at that area, it wasn't able to break through, because there were more buyers than sellers, and then it moved up.
Okay.
So when we look at candles, there are a few type of patterns that have been like termed in the trading world that people will look for, and it might give you some indication of where the trade is going to go. So I think I noted, so I gave you some pictures. This first one that I gave is really good to have. I keep it on my desktop all the time, but it just kind of gives you a good idea if you're in a bullish or a bearish trend based on the candles that you're seeing and kind of the top of the formation. So when you get a chance, look at that. But the difference between the candles, so Apple doesn't have very many dojis, but I will show you some. Regardless. So when you have a big candle that's full like this, that's just called an engulfing candle. Whether it's red or green, it doesn't matter. Obviously, if it's red, it's a bearish engulfing candle. And if it's green, then it's bullish. And that just means, obviously, that I kind of said that there was a lot of activity within that candle. When you have something like this where it's more wicks, there's less activity happening in this candle. So there could be a little more indecision. Like, there could be almost the same amount of buyers and sellers in here, and that's why the body is so small, because it did spend a lot of time kind of going back and forth and not spending it in this area.
Right. Okay.
And when you have a doji, like a true doji, see, I don't know if Apple, well, this is kind of one. So when you have this doji, you can see that most of the orders in this were, obviously they were red, but they all pretty much held down here, and the sellers were really holding it down. You can see that in the next candle, the buyers really took it over. But if you looked at what I just showed you, so that was an inverted hammer, which is bullish. So see this picture right here? It's like a long wick and then a little body at the bottom. I don't know all their names, but I can just recognize them. So this is, I guess, called an inverted hammer. And that means that it's a bullish sign, even though most of the buyers or the sellers in here really pulled it down, and it looks like it might, like, because if you covered your screen and you didn't see anything to the right, then you might have thought it was going to go down. But if you have this little kind of tool in the background, or you kind of look at it and say, hey, this kind of looks like this doji candle, then it may help you to not get in a short trade. And you may not get in the long trade either, but just to recognize that it's probably not going to continue down, then that would help you. So those are dojis, and you can look at, like I said, look at that document whenever you get a chance later, and just kind of maybe have it as a go-to or print it out or whatever. But a few that I really like, so we'll look at tweezers first. So I think I saw some over here. Yeah, okay. So a tweezer it's a tweezer top or a tweezer bottom, and what it means, and I sent you a picture of this too in the email, but just for reference, but what it means is when two candles close, and they close either at the same topping area with their body or the same bottom area. So you see where my cursor is? So see how this candle is
Yeah.
green and red, but their body's closed in the same area, like the same line? It has to be like the same exact area. So if you put your cursor over it, they have to be like exact. Then this is what's called a tweezer top. It doesn't matter about the wicks, so don't worry about the
Right.
wicks. It's just the body. And when those bodies form like that, so obviously you would have to wait until the candle closed, because you can't make an assumption of where this candle is going to close until it actually finishes that 5 minutes. But once
Right.
it does, then you would have an indication here that this is a tweezer top, and it is going to go lower. So with a tweezer top, then it just means if they're topping at the same level at the top, then it's going to be a bearish signal. And if they're the same level at the bottom, like a tweezer bottom, then it's going to be a bullish
Yeah.
signal. So with this here, with these two aligned, you could say, oh, this might be, and because this candle was pretty bearish engulfing, you could say, oh, we may be moving down in the next, in the next few candles. And it did, like it clearly moved down.
Right.
Sometimes tweezers can be a little tricky, so you have to be careful. You have to keep your stops very tight, because if it goes, obviously if it comes, when your new candle starts, you would want to have your stop obviously above this area, because then that would invalidate the trade. But it's really just to kind of start looking for them, like see there is this one. Oh, that's a little off, so that wouldn't be one. But let's find a tweezer bottom.
The tweet, but just so I
Huh?
understand, by definition, the tweezer has to be like the nut exact line, and then that's where the decision process comes in, or where you evaluate it as a tweezer.
Yeah, so
Okay.
exactly. So once the candle closes, like these right here, and it could
Yeah.
be two red ones next to each other, it could be two green ones, it doesn't matter, just where the body ends at the top or the bottom, and then you would take that trade off of there. So some people will wait for confirmation, like with this tweezer bottom, you'd be like, okay, I'm ready to go long in the next candle. Some people would wait to see what this candle does, just to see if it actually gets above this previous candle, and if it does, then they would enter the trade. You can see obviously the trend overall, it did move up, but it did come back down a little bit. So
Sure.
you just have to be willing to have some risk there. But overall, they work pretty well. You just want to be careful. Like, see this one? Oh, no, this is close, but no. And then this one like wicked up, so you would have been taken out of that trade. But it's just something, it's not something to say 100% I'm going to take the trade, but it's giving you a little more odds of, ooh, I see this happening, so this may happen, and I may be ready to take a trade if I feel comfortable doing so off of a tweezer.
Okay, that makes sense.
Okay. All right, and then the next, and you know who does this a lot is NQ. So I'm going to go to a futures chart, even though my chart's going to look super crazy because I have so much stuff. All right, so this is NASDAQ. You'll notice in the room, I prefer NASDAQ over ES, but ES, the S&P 500 and NASDAQ literally run in tandem. They just have different prices, and they go by different, like you make more money differently. So ES, it moves a point in, like they're both by quarter system, so they're both kind of like $1, so 25 cents, whatever.
Yeah.
But per dollar or point, NQ only gives you $20, and the S&P 500 gives you $50. But that's because the S&P moves 3 times as slow as the NQ. Like the NQ moves 3 times faster. So whenever you see, if you ever start noticing the end of day close, like today, NQ closed up $50. It's usually a third of that is what the S&P does. So it's a
Okay.
little slower, which might be better for beginners. But sometimes I just feel like it's too slow, that I don't know, I don't make the money quick enough and get out, or it will just like chop up. So it's a preference thing, because I know some people that
Sure.
love ES over NQ, but you can decide that on your own. But NQ is one that just moves a lot, and I've had a good amount of success with it. So that's why I prefer NQ. All right, so what we're looking for now, I'm pretty sure I sent this in the email too, is, I know these are tweezers, oh yeah, here it is a 3-bar reversal. So a 3-bar reversal is pretty much what it's saying is you will have 3 bars in a row, and it will be notifying you of a reversal. So here's one right here. I'm going to highlight it for you. But what it is, and the colors again don't matter. Oh, is this not going to, oh, hold on. It's simply going to be, so we're moving down, we're in a downward trend here.
Yep.
We have this red candle, it doesn't matter, that's engulfing, and then we have this green, which is a doji, and then we have this other green. But what we're seeing here, it's kind of makes like a V shape, and it's
Yep.
called a 3-bar reversal. So pretty much what it's saying is you are moving down. Now we have this one candle, and now we're making a move up. So after this third candle closes, and you can see, oh, we're making a move up. This looks like a 3-bar reversal. You could take this very next trade. So what you would do is you would literally get in right here at 81.28, and this thing shot up at 8:30. Was that today? Yeah, 8:30 this morning. Oh, that's when the FOMC was speaking. But regardless, these are all over. Like there's one right here. You'll just start to see them like crazy. So it's just
Yep.
after a trend, and you'll have the 1 bar, and then you'll have kind of, and it's usually a doji, similar to a doji is like your middle one, and then you'll have your third, and then you would get in right here. And this one went a little against you, but it was like $2, and that's fine because our stop loss in NQ is $6. So you wouldn't have been stopped out, and then it continued to move down. I prefer a 3-bar reversal over a tweezer, but I think as a beginner, it was easier for me to see the tweezers than it was for me to see the 3-bar reversals. So you'll just have to try to keep your eye out and look for them and be like, oh, is this that? And, and you can always obviously like look back. Let me see if I see a few more. I feel like this is one right here. They're pretty easy to pick up just because they're always, let me take this out, at the end of a trend. So look here. So this isn't a 3-bar reversal, but do you see what it is?
Looks like a tweezer.
Yeah, so this is a tweezer bottom, and then it moved up, and that was a good move up. And even are these tweezer tops right here? Looks like they are, these two. My line is kind of in the way, but they're really close. But yeah, so usually at the end of trends, you'll I guess like this, you'll have the tweezers, or you'll have a 3-bar reversal that are giving you an indication that it may be turning at that point. So that would be a good indication to, if you were in a trade, say short, to get out of your trade at this point. Or if you were looking to get in a trade, then at that point you could be like, okay, we can go long. Like there's a 3-bar reversal right here. The red, green, green. Again, the colors don't matter. There's, no, that's not a tweezer. Like a tweezer. But yeah, so these will really help. And even here, this is a 3-bar reversal. Even this was really choppy and sideways. It came up here. It had this doji, and this doji is on your chart too. This is a shooting star, and that's bearish. And so then, so you always want to have a few things telling you what you're thinking before you get in a trade. So in this situation, you'd be like, okay, it's a 3-bar reversal. I also had a shooting star, that's bearish. And whatever, if you had a line here for resistance in the past, you'd be like, you know what, and I have a line of resistance here. So it's going to be really, really hard for this to go above this line. So I'm willing to get in this trade with my stop being right here at this bar. Does that make sense?
Yeah.
Cool. All right, so now we will talk about, so it's pretty much like candles. Do you have a question about like the candles themselves, or kind of how they form, or anything like that?
Not expressly at this point. I'm sure I will at a future point. Just kind of taking an opportunity to repeat back my understanding. It's basically the candles are the chart. The candles are the charting mechanism for performance of the market, or performance of the indice that we're following. And then the cheat sheet that you went ahead and shared basically does, or identifies, initial pattern recognition to say these are the key indicators that give us super strong hints that the direction will be moving this way, up, down, bullish, bearish, all those kinds of things. Does that seem like a pretty accurate statement? Okay.
Yeah, exactly. Yeah, it's really just, this is the map of what's happening. So, when you open up these things, you want, like when people look at the overall market, obviously this is a 5-minute chart. If I go on an hourly chart, it's going to look a lot different. And you just want to say, like, look how big these bars are, but we're pretty much just looking at the overall trend, because like you said, with 1 bar, you're not going to really get an idea. Like, yeah, you can say, oh, from 6 to 7, it was really bullish, so we might be going in that direction, but you have to put it all together. And even here, you can see 3-bar reversals on an hourly chart, which is crazy, or you'll get tweezers. Here's a 3-bar reversal right here too. you'll get tweezers, see like this, but this is what we're going to talk about next, which is support and resistance. Is you'll often look at these tweezers right here. You'll often get tweezers when it comes to a support and resistance area, because while trading, so activity went beyond this resistance area on both of these candles, but when it comes to where it closed and kind of where most of the activity happened, it really was only allowed to happen in this area, because there may be a supply zone up here that we're not aware of at this point. And we'll get into that later, what a supply and demand zone are, but that just means that there's a lot of people either, selling at this point to get this pushed back down, or buying here to get this one pushed back up. So, that's all in kind of like the background of what's happening. But what we see is that the tweezers are showing us this level is really strong, and then it's probably going to reject from here, because if it can't get through on these two candles, then it's most likely going to go the other direction. And that's exactly what it did. And then it went down to support down here. So yeah, you'll start seeing these all over. All right, so now we're going to talk about support and resistance, and I'll just probably go to a 15-minute chart. Let me get rid of some of this. You said you got your Tradovate set up, your simulated account?
Yeah, I have the account set up. I'm in the simulator. I believe they're reviewing the materials that I sent over for getting ready for funding, I hope. I didn't hear anything today, but yesterday they're pretty responsive. So
yeah, they're usually pretty good. And then tomorrow, I'm going to put this in the chat. Tomorrow is actually a bank holiday. So I don't know, they might still be working and processing, but the market is not open. So we won't be taking any trades tomorrow. But yeah, definitely with a simulator, play around and just get comfortable with it, because I know especially in the morning trades, when we're in a trade, things can go really, really fast. And I want to make sure everyone that's new to this is comfortable with getting in and out, or if you wanted to obviously move your stop loss to break even, then I want to make sure you guys are comfortable with that. So definitely practice as much as you can in the simulator, even when I'm not calling trades, just so you get an idea of how it works. All right, so support and resistance. So support and resistance is pretty much that. It's going to support the market when it comes down to an area of support that we have drawn. And then when it goes up to an area of resistance that we have figured out, it's going to have a hard time getting through it. It's pretty much like a wall at both sides. And if it breaks support or if it breaks resistance, that means the trend is pretty strong. And we can assume that at that point, the market overall is going in whatever direction that is.
Okay.
So the way that we find support and resistance is we look at multiple time frames. So I always want to start off on the furthest one out. I start on a daily, and if you notice, it's gonna look a mess. If you notice my charts, I have a lot.
That's okay. I can see the candlestick pattern through the lines. That's not that's not a problem.
Okay. So I have a weird system, but my purple dotted lines are my daily. So this is a daily chart. So each candle represents just one day in the NASDAQ market, because that's what we're looking at here. So when you do that, actually, I'm going to just go back to Apple because it will be clean. Here we go. So I think I had some marks. So when you come here and you look at the daily, this is where you would want to start, and you kind of just want to move your way down. So whatever chart you find that you're using the most, or if you want to mark up all of the charts that you think you might be trading at some point, that's a good idea. So you want to just start on the daily and move your way down. You can even start on the weekly, but you don't really need to mark the weekly at this point. Okay. Since we are intraday traders, you will be looking for swings. We do have a time that we're going to talk about swing point analysis, but I really don't take many swings. I do everything intraday and I get in and out. So a daily is a really good support or resistance line to have. So what you just do, you go on the daily chart, and then when you get your price indicator, so it would just be a little pencil that you can use to draw it. You would just draw it. So for this red day, you would literally just take it and pull it across and put it on the exact top of that day and then the bottom of that day. So you want to include wicks. If there's no wick, obviously just the top of the body or the bottom of the body, but you want to include wicks for each of these. So daily, the higher the time frame, the stronger the support and the resistance are going to be, just because it's saying in that day or in that week it couldn't get past this area, so it must have either a lot of buyers and sellers there. It must be just a really strong area that people aren't willing to let it kind of get through. And as you
Okay.
can see, I literally just marked this red body, but then you can see it actually hit this area back here, which was 1, 2, 3, 4, like several days earlier, 5 days earlier was the same area that this was a green day and it couldn't get through this area. And then it seemed like this one tried to come up here and then it turned into a red day and it came all the way down here. So
Okay.
you would literally just go through and mark each candle. I would say go back if you're on the daily, go back like a month or two and just put all the daily lines, because they really do come back into play, especially now with the market and it moved down so much. It went back to like October levels. So obviously if you didn't have things marked back in
Oh,
October, then you wouldn't know your levels at all. That's why it's
I
helpful.
see.
But when
Okay. No,
markets
that makes sense.
Yeah, but when markets were at their highest back in like November, December, people didn't have any lines marked. They're like, we don't have a support or resistance for this area because we've never been in this area before. So it was like, you should have seen everybody. It was like crazy. They're like, oh, so we don't know what's next. Like, we don't know kind of where the next level could be or where the next resistance could be because we've never been here before.
Right.
It's pretty funny. So, but yeah, I found these to be really, really helpful. And if you want to obviously like change the colors or whatever, when I do my daily, I have it one color. It's like the purple dotted one. But then when I do my intraday, like we'll get down to lower levels, then I do like the red. So that would be a daily. And then after a daily, you would go to a 4-hour time frame. So this would just obviously be the day broken up into a few pieces. With Apple, obviously it doesn't run all day, so you wouldn't have as many candles as you would in the futures market since it runs 23 hours a day. But you would mark these the same, so just the top and the bottom and of pretty much each candle. And then after the 4-hour, you would come down to the 1-hour and you would mark those. And you'll find that a lot of them will overlap, like the 1-hour that you, or the daily that you marked might overlap with your 1-hour. So you don't have to like mark both of them. I would keep the daily just because the daily, whatever color you're using or symbol or whatever, would have a stronger indication. And so you just want to kind
Right.
of know that without having to like go back in your notes and look or be like, oh, what's this? Which one is this? So that's why I color code them. Just to see, look at this. So, and what you want to do is when you're picking, so for daily, you're going to mark all of them. Sorry, I forgot to
Okay.
mention this. When you come down to like 4-hour and 1-hour, you want to make sure it's touched this area at least 2 or 3 times. So, and you always want to look to your left. So you would start here, like, see how I just saw this green one, and I was like, oh, let me mark this. And then my eye moved to the left, and I saw that it touched here, and it touched here, and it touched here. This one broke through, but then it pulled back up. So
Okay.
and it doesn't matter if it has touches on the tops or the bottom, because once something breaks through, this is obviously called resistance. So once it breaks through though, then it acts as support. So you always want to keep that line there,
Okay.
even if say you have something marked up above at, in 999 and you're at 980 and you're like, oh, we broke through 999. Like, I don't need this anymore. It's no longer resistance. But then that line is going to become support.
Okay.
So it will be used in the observation. Sorry, do you have a question?
Yeah,
Yeah.
quick question. Just does Tradeovate as a platform allow me to do the markings and saving and identifying? The way that I internalize this is basically kind of a journaling process that you're going through with respect to markings and the analogy where when we reached October levels, nobody had, or I'm sure very few people had levels marked with symmetry back to those October November dates when we fell back to that levels.
Right.
So seeing that you're screen sharing with the Think or Swim, which is, I believe you identified as the TD Ameritrade product, does Tradeovate allow the same mechanic to be used, or should I be using dueling
They
platforms?
should. So I'm pulling it up right now,
Okay.
only because I used to use Thinkorswim as my futures platform, but then I realized that their fees are too high and their margins are really bad, so then I stopped.
Okay.
But Tradeovate in general has really good charts. So I just pulled it up on my big desktop because I'm on my laptop right now.
Right.
And these are like, what I'm doing here is pretty basic, where like it's like
Sure.
drawing a line. So they should definitely offer that. But let me see. And you can even trade on their charts, which is really cool. you can like right click and do a trade. I've never done that before, but I'm gonna have to play with this. Let's see. Because I know like it has indicators. I just want to make sure you can actually mark on here. If not, there is, and this is what I was going to put in the room today, is there are other like charting softwares that are called, like there's one called Trading View. It's a free website. If you want like, and you can even save your stuff and everything. I think if you want more in depth, you have to pay for it. But I know I've used it before with just like drawing lines and drawing boxes and seeing areas when I was at work. Oh, look at this 3-bar reversal at 10:20 today. Jeez. Sometimes I forget about certain things, and then I like will do one of these lessons with someone, and I'm like, oh, like I didn't even see this today because I'm just like all over the place. But
Awesome.
I'm trying to, oh, here it is. Okay, drawing tools. So yes, when you're in Tradovate, if you add a chart to your, platform area, you can also start a whole new window. Like I just kind of found that out recently, that if you click on something and you pull it like away from your trading like DOM window, you can have a whole nother window open. And if you do that, or if you just keep it on your screen, whatever, once you have the chart up, it looks, if you are scrolling over on the left-hand side, it has all these little buttons, and there's one, chart type. So candlestick is fine, has your time frame. So 5 minute, you might want to have two charts up, like a 5 minute and a 15 minute, or like a 1 minute and a 5 minute. 1 minute is really good when the market first opens, just because it will give you obviously the immediate information, since the market moves so fast at that point. Let's see. But there is a thing called drawing tools. It's like on the bottom left. So if you click on that and then it says horizontal line, then you click, and yet you just double click. Yeah, that's perfect. And then you can move it around and you can extend it. So yeah, let me see if I could change the color. I'm sure you can. There's supposed to be like a really good, like Tradovate was recommended to me by somebody that does a lot of drawing. So I think shapes, vertical line.
And the genesis of the question is just from a day one perspective. I just want to make sure I have the software and the platforming set up in the way that's consistent with everything that you're teaching.
Yeah, definitely. And like I said, you'll be getting these videos, and when I send like the nightly charts in the room, obviously you can be looking at those and kind of seeing what I have. And if I ever see like a chart, an area of the chart that I wanted to mark out, then I would probably send that through the room too. The chat, obviously with you, it's going to be a little more detailed. So whenever you have like questions or concerns regarding like stuff with the mentorship, just obviously reach out to me. I'm always here to help. But when it comes to most of the people in the chat room, most of them are there just for the alerts. So they don't really, if they don't want to do the work, they don't have to, they don't have to chart things out. I'm teaching you because obviously at some point you want to be doing this on your own. You want to learn the skill. So so that's why I definitely want to make sure you're set up with it. But everyone else, I'm not going to be like, oh, make sure, you're drawing your lines and make sure you're charting this, because for them, they might not want to, and they don't have to. Like, they're paying for a service where I'm literally just going to tell them when to get in and out. And, that's convenient for some people. So.
Okay. Awesome.
Yeah. All right, cool. So yeah, so I definitely see that you can put them on there. I don't know if you can change the colors. I was trying to, so you'll just have to play with that. All right. So yeah, so like I said, you want to make sure that it touches multiple times. So let's see, if we put our cursor down here, like this one, I don't see it touching. So you want to kind of go back into history and see if it did touch before. It was this red one down here. So if you take it and you put the line, then we see, oh, here it is. It touched here. It touched here. It almost, this was a gap up. So it broke through here, but then this became support. And then this is support, and it's been acting as support ever since. So it was support here. It broke down on this day. Must have been, this was 320. This was obviously recently with more bad news, probably Corona stuff. And then for some reason on this Sunday, it popped up, or Tuesday at 9:30. So there was a big gap up. This is crazy big. Is this a holiday? No. This is Apple. What am I talking about? I think I'm looking at NASDAQ. Sorry, this is Apple.
Yeah.
So this was just the open the next day. So this is just called a gap up because there's a gap in between where it closed the day before and where it opened here. But previously, this was the line that we just marked. So previously, this was acting as support. It's still acting as support now, but at some point it broke through, and then it would have been resistance, but it actually kind of broke through pretty easily on resistance, and then it continued being support. So support here,
Okay.
here. So you just want to make sure it touches at least 2 or 3 times before you mark it. Like you can mark it and then scroll over, minimize your screen like I did, like just kind of squish it up, see if they touch a few times. And if they do, then you can keep it on your chart.
Yep.
Let's see if I have an example of where one, and like this is an hour time frame, so it's going to have pretty strong ones. So you're probably not going to see a time that it didn't touch multiple times. And then after the 1 hour, you're going to go down to the 30-minute. So it's pretty much the same process on all of them. You just want to make sure you have not as many, because you don't want your chart to be confusing to you. I don't want it to be like a whole bunch of gibberish going on. But what happens in this situation, and you can see this here with like literally the 2 lines I just drew over like a
Yeah.
4 hour and a 1 hour, is that it's really going to give you an area of trading space. It's going to say, hey, John, if you get up to this zone here, you might want to be careful. You know, it might reject. You might want to start taking profits off. And that's what support and resistance are really there for.
I gotcha.
Yeah, they should give you an indication that you might run into, you know, if it's not a really, really big move, it's probably going to turn around. So either you want to be moving your stop loss up to see, hey, maybe you will break through. And that's what we have runners for too. If you have one or two, if you have more than 2 contracts, or I'm sorry, more than 1 contract, you could be in this trade from here and say, because this is support and it's acted as support for a while, and you're like, hey, you know, I'm pretty sure we're going up. It looks like we're getting some good momentum here. So you're getting in a long trade. You're going to want to definitely at least have one, if not all of your lots out here at this point. But if you want to take the chance on a runner and be like, hey, you know what, I'm getting out of my 1 lot and I'm going to leave my other lot as a runner, see what it does, because obviously at this point you've already made probably a few $100s. So it's like, all right, you know what, and I'll move my stop loss up to say here. And if it comes back to this area, because that means it is turning around, then so be it, and I'm locking up $50 instead of 100. But if it obviously broke through the resistance, then you're going to be making a lot more. So that's the theory on that. But as you can see here, like it ran up pretty hard here and then it dropped all the way back down. So that's why you want to have these levels, because they give you an indication of where it might be going, where it could stop, and where you're just going to have an area of like kind of trouble to get through, or it could be an area to add more shares. So one other way to look at it would be, let me zoom in here. So if you were, let's see, if this was like green at first and you're like, oh, it looks like it's turning, we might be moving up, and then it obviously continues to go down, you can say, well, you know what, either I'm going to get out here because I know that it might go to this point, or you can say, hey, you know what, if it doesn't break this support, I'm going to add a contract here and I'm going to average down. And then if it does bounce off of here and go up, I'm going to be making a lot more money, because now I take the average of my entry here and my entry down here, and my entry is really going to be more like here. And then I'm going to pretty much have this whole move up to here.
Okay.
If that makes sense. Like we really shouldn't be taking trades in the middle of space like this, unless for some reason we have some really good indication to do so. But yeah, and you'll learn that as we go on, because we'll talk about that. And then from the 30-minute, you don't really have to chart 15 minutes, but look, see how I go down? I keep going down, and you'll notice the lines you've already drawn are a really good area of where even, so now this is a 15-minute. So these are 15-minute candles. And look how many times these have touched right here. And this looks like a 3-bar reversal. And then see it flushed down here. But then this acted as support, and then it kind of just chopped in the middle for the rest of the day.
Okay.
Cool. Do you have a question about this right now?
And let's see here. No immediate questions, but something that you mentioned from Chad is basically you're looking for ins and outs at either end, from support or from resistance, and then one of the heuristics that you identified is, you know, don't get chopped up in the middle. So don't get chopped up in the middle, so to speak. Look for easy ins, easy outs, so to speak. Is that a generally correct statement?
Yeah, and it's hard. Like even sometimes I'll catch myself buying in the middle or like buying in because things will start moving and you get excited and you're like, oh, I want to get in this,
Yeah.
I want to be in this move. But if there are areas like, let's see, where did I get chopped? Look at this morning, yeah, this morning was choppy. Where's 9:30? So this area, like this is your 15-minute candles, but as you can see, it's like green, red, green, red. Like the market was not sure what it wanted to do, what was going on. Look how long this wick is. That shows that there was a lot of like indecision, and even this wick was really long. So you don't want to be in an area like this because you're not sure. And even right here, look at this right here. There are literally sideways. You don't want to be in any sideways action. And this just means that there's no real consensus over we're going higher, we're going lower, but you can see that they're trying because it's like green, red, like people are fighting for the one way or the other. Right. And as you can see in this instance, I have this level here, which is marked as the overnight high because it was the high of last night. And that's acting as serious resistance here, even though it broke through at the open because the open is very, very strong. It seems like here at 1 p.m., 1:30, they were not as strong. They were not able to push through this area. And so then just what happened is it just failed and it dropped all the way down. And then it tried to move up again and it didn't get this high and it didn't break through. But you just don't want to be chopped. You don't want to be trading an area like this, even like, cause it can get exciting because it's a green candle. So green candle, red, green. This was green to start because, right? Maybe not. Maybe flush down. I was thinking it was because I feel like I was trying to take a trade at this point, thinking it was going to get over this level, but then it didn't. I was like, oh, over 75, I like it, but it never broke. So then it was clearly a short, and I got in the short. Even though I don't like taking afternoon trades, because the afternoon, especially today, was like a Friday. Sometimes in an afternoon when it's not a Friday, it's okay. But afternoons can be really, really slow and choppy. Most people are done trading. They make all their money in the first 2 hours. So all of those people are gone, and then you don't have them in the market helping it move. So you'll while this may be an easy short, then look, it was sideways again. And these are 5-minute candles for like another 30 minutes. So it's like for these 30 minutes, are you thinking, oh, it might be going against me, So you have to be careful, especially because it hit this resistance down or this support down here that it's like, oh, it might be turning around and just be staying in this area. But then it did actually break down. And then again, it was sideways here for a while. So you can definitely get chopped up, and you don't want that because it's so easy to get caught up in that. You want to be in a trend. So while you can't wait for a trend to happen, you have to just so this was a trend where it was moving up, but you can't wait until the third or fourth candle to get in the trade, because then it's, at some point it's going to stop. Most likely the market's never just going to run up or run down. While it looks like it did the last 6 months of last year, just ran up. We had I don't know, out of 3 months, I think there were 3 red days overall. It's still within the day, you're going to have ebbs and flows. The market never just goes all the way up or all the way down. It's always going to give you some type of pullback and then come down and give you some more pullback and then maybe go up. So you have to be aware of that. And we'll talk about that in market structure, knowing kind of your areas and when things are going to come into play that way. But a trend is really when you start to see things move down. Obviously this is a trend. But once we have areas marked where we think kind of they've come to exhaustion, then you want to try to get into the trade before it's already happening. And then once you confirm the trend is happening, it's a good sign, and you could just stay in it and try to ride it. But yeah, and that's why things like the 3-bar reversal help. Look at this. So this was the overnight low, which means it really happened. Did it happen earlier? Maybe not. Maybe that was, what was that? 81.34. And this is, no, this is lower. So this is the lowest it went today from the overnight into today's session. So this is a 3-bar reversal where if you saw this, We're like, oh, this, red candle, what's going on? It looks like obviously it was trending down from here. From 7 a.m. it was trending down. Then we get this green doji. You're like, oh, like, let's see what happens on this candle. This candle is also like a little bit of a doji. Remember, this is the hammer that we saw before. And so this is a bullish indication. So you already have the indication of the 3-bar reversal. You already have that maybe this trend, this little downtrend is ending. And you have 2 indicators saying that it's going to be moving up. And so off of that, you could be taking this. And remember, this is the one we saw in the 15-minute chart where it just showed red and then the doji and then like the big green, because it was the FOMC, the Feds were speaking at 8:30. But you could have seen this ahead of time on the 5-minute chart, because you would have had this time to let this candle play out and be like, oh, I'm going to get in. And then you get in, you get in at this candle and it never goes against you and it just runs up. And obviously you would have gotten out. And if you had runners, you could have left them on and kind of seen what happened going into the market open. But when it comes to kind of finding a trend, you just don't want to be in a sideways action. This definitely isn't sideways. Like, this is a move down. And then with a 3-bar reversal, it's kind of telling you that it may be changing direction. So, and like sideways for 2 candles, like right here, like how we have like tweezers and stuff, that's fine. It's really just when you get like these 3, 4, 5 candles in a row, that's clearly sideways action. So, and you don't want to be. All right. So let's see. Let me see what I have in. I feel like we're moving kind of quick because we kind of went over this first lesson. So candlesticks and support and resistance, we've pretty much covered. We can look at it. If you want it, do you want me to look at it like on a different chart? Do you have something that you want me to pull up that I can mark up for you really quickly?
Really any markup exercise would be great.
Okay.
I'm kind of I have a degree of constructive indifference to the indices or whichever is picked. I guess the way that I would internalize the things that you're sharing with me, this is basically the technical exercise of going through and spotting a pattern recognition, so to speak, and pattern recognition in the sense that this is how the market will change and then give us momentum to put in order or contract, and then you just kind of see how it goes.
Exactly. And the market always repeats itself. Like it is always like evolving. Obviously we can go higher, lower, whatever, but it is crazy how often it will come back to certain areas. Like this one area in the S&P 500, 2,500 mark had been touched like several times the past 2 weeks. And every time people kept thinking it was going to break down and break through, and it didn't. It just kept like holding as support, which is crazy. But you'll start to see these areas that they kind of travel to a lot, and you'll be like, oh, this, I remember this from last week or from last month. And you'll notice that they really do kind of just it's always like an area of repeating itself. The market is just crazy how it does that. So let's go pull up gold, and we can, because I know I don't have too much marked up on gold. This is the daily. I look at it back then, it was so low. Gold has gone so high now with all this.
Given the climate we lived in when my grandfather passed away, I come back to thinking he was right. Basically, he just had stocks, gold, and guns. So.
Oh yeah, it's so true. Like it's crazy because gold, or like how now people are trying to like obviously push Bitcoin. Like I don't know much about it. So see, I went back to the daily time frame. So I just found kind of this level, and I see these 3 match. So I'm gonna mark it up. So I just double click and then it marks it here. But so I really just do this, like kind of see, I was trying to check out this one, but I don't see it touching. So I'm probably going to leave that one alone. Plus I have this one above. But yeah, it's true. Like how when people get scared or uncertain, then they're just like, fuck the US dollar, fuck this. So like, I don't know. Like, it's crazy.
Yeah, yeah. I got some. My grandfather passed away. Like I said, I got some. I literally have a safe with nothing but some of his old stuff in it, and
Oh,
some gold stuff from the 1800s, and
that's
blah
so
blah blah.
cool.
So
That's
yeah,
so cool.
crazy world.
Yeah. Um, all right, so I was marking this one here as for like the tops of these. And then as you see, when I brought it over, it was actually used as support at this point, and then it broke through.
Okay.
But like I said, it's always a valid one. And then it finally, so you can see maybe it was trying to break through on this one and it couldn't. And then it came back down and it broke through several days later. And then I'll go down to 4 hour. So let's see. I like to squish it up. I like my charts kind of like wide and bigger when I'm actually trading. But if
Yeah.
I'm looking for levels, I like to squish them just because it's still easy to see the bottoms or this. This sounds pretty good. So it touched here, almost touched there, touched here. So it's really only two. It touched here, but it like flushed through. It was kind of a resistance here, and then it broke through. So we'll keep that one there. It's hard to find, and it's hard to find multiple touches if they're having like a big move like this was.
Right.
So just have to, that's why squishing your chart is good too. So this was a good one. Look at this. So see how down here, if you would have had this area marked back in July of last year, it really came into play in August. So this was August 1st. So this was
Okay.
July 25th. And then it started making a move up. It came into some resistance here, and it had a few red days, came down. You could have said, and this is what the big banks do and the big brokers do, is they say, hey, like this is moving down. We're going to put a buy order here because we saw that that was a nice heavy support back in July. So we're putting all of, our buy orders here, and
Wow.
we're going to see what happens. And if it touches, then we get what we want. If it doesn't, then whatever we miss out on it, we'll wait for the next trade. And
Right.
we'll go more into depth with that, like supply and demand. That's where we'll have supply and demand zones where the big banks literally just sit and wait for a stock or an indice or whatever to retrace to an area. And once it gets there, they just buy it all up or they sell it all up. And that's why then at that point, the market moves very quickly.
Wow, the rundown, and again,
Yeah.
speculating here. I'm sure for the big investors and the big banks, the rundown over the past couple months, in light of the Corona world that we live in, was probably fascinating to them because it's just goes in that direction. I'm sure in a lot
Oh,
of ways it did.
oh yeah. Oh, for sure. And like they definitely, you could see like the areas where they had so many orders of them just like selling, like sucking up all of the orders. Like people really thinking the market's turning around at some points, and then they just have all of these sell orders, and it just like flushes again. And then the retail people like us, because obviously we're not trying to risk that much, we get scared, so then we get taken out of our trades, and we're like, oh, we're getting out, and then it just goes even faster because if if a lot of people have bought in to sell and say we are long and we get out of our orders, then that makes it flush even faster because
Okay.
then there's no resistance. There's no people like, holding it, trying to hold it up. They're just like, oh, fuck this, I'm getting out. And so when we get out as retailers, they are just plummeting into all of their money because it's just going to keep going in the direction that they want. Um,
Wow.
but see, like the reaction off of here, and this is a 4 hour, this was 9 a.m. So it's like the market open into the afternoon. But this area is definitely a big area. And so they could have put in a lot of huge orders here. And when it came down, it just shot up and it continued up. And then it started sitting in this area because then this became the new support. And then from
Okay.
there, so then they just hold this. They just hold it until, I don't know, until I guess they see fit. They've made enough money for their clients. I'm not sure.
Wow.
But yeah, so that's a 4 hour. Let's see. Oh, we can find some others. Oh yeah, see this is nice and so I'm looking like over here and then I'll look to the left. So I'll see if I can find anything in this area. Either like the bodies or the wicks. I feel like the bodies here line up with this one. Kind of like cuts through. It's not too bad. Like you can see, actually no, it touched a good amount. So these almost like pushed through, but then these two were stopped here. This body was stopped. This finally broke through, and then
And are you and real quick, Lauren, are you the line basically right there at 1541 and a half?
uh-huh.
are you labeling that as a support line or
So
resistance line?
yeah, good question. So I'm literally just marking it. It doesn't matter. I'm just marking a line that has been touched multiple times either way. And
Okay.
then when we're in our current market, we will then know if it's support or resistance. Because if we're below this, then it would be, if we're below this, then this would be resistance. But if we're above it, then it would be support.
Support. Okay. No,
That
no,
makes
no,
sense.
no, no, no problem.
And our current price is 1740, so we're way above this. So this would now be a support if for some reason we came back down to the 1540s or whatever.
Okay.
But yeah, good question. So you really just want to mark you, and I'm far away. Like I'm on a 4 hour, but I'm back in like September for some reason. I guess I like zoomed over and zoomed out. Like I said, you don't have to go back that far, but you just really want to look for areas that see how like these wicks, they came up a lot and they were never able to really break through. So that causes like in my eyes, like go right there. So I kind of want to mark that, and they're almost at the same area. And then like, so this one isn't perfect. Like it really only touched like a few times. This green candle, that was good. But as you can see, like, and you don't even have to see, like, I don't even look at the reaction. I literally just look at areas where it can't break through. So on the
Okay.
bottom
Yeah.
or on the top, like where is it having difficulty continuing to move in that direction? And I just see that with my eye now from, from habit and from doing it a lot, that I just see, oh, like this is an area that things couldn't move through. So let me mark it and let me see if there's some things in the past. Like, and then obviously if I pulled it over, look, it touched right here too. Like it pretty much touched this whole area and all of these wicks that weren't able to
Right.
push through. So this is a big area of resistance. And so, like I said, again, about the banks, like, they could be sitting here, and then when they get their sell orders, because look at this big move up, like this was a nice move up. And then it's like, there must be a whole bunch of sell orders here. Because remember, the only things that move the market are the sell
Oh, I
buy
see.
order. People think it's like the news. It's not. News is secondary. Like news definitely affects retail traders like us, or like, people with 401ks and stuff like that. The big
Right.
banks don't care about the news. They know things are going to bounce back. They know, especially like COVID is one thing, but when it comes to like certain like random things like Trump tweeting or something like that, like yeah,
Yeah.
that might move the market for 5, 10, 20 minutes. It's going to come right back. Like
Okay.
it's not, and banks aren't worried about stuff like that. So the news is just like a secondary thing. So right here, you have a lot of really big banks and sellers sitting here, and they're waiting.
Yep.
So once they're getting filled in this area with like the wick, they get filled. Look at this. It flushes right down, and then it kind of goes sideways a little bit, and then it continues to flush. And this was overnight too. Oh no, this was 9 a.m. But then it continued to flush in this same area. So then they say, oh, if it comes back here again, I'm gonna get some more sell orders, and I'm gonna sell this shit again. So look, it came back up, and like they may have gotten out for a profit here. They may still be holding because they want a bigger profit. And then
Yep.
it comes back up a few days later in November. They're selling again. They're like, oh, give me more of this. This is exactly what I want. And look at this. It just plummeted down and continued going down. And
Okay.
and went all the way back down to this level that we had that was marked like forever ago. So that's why these levels are so important and so helpful. Like they were probably like, I want to take it down to this purple level. My purple levels are like dailies. So 1446 from 1517. So that's not that much. It's like 60 points, so $6,000 a lot. So obviously for us that's big. For them, but and they might have hundreds of orders in there, So
Okay.
it could be $60,000 over. Let's see, what day is this? The beginning of November to the middle of November. So you think that they're fine waiting, 2 full weeks for their clients to get $60,000 or $600,000? Like fuck yeah, they are. So they're trading 100 lots or 1,000 lots. They're picking up $600,000, 600,000 for their clients. Like, yeah, that's a good trade.
Okay.
So that's why these are super helpful, and they're just good areas to have. So I want you, like, obviously you're gonna have like homework every time. So I want you to either use the trading view, the charts there, or the charts on Tradeovate, doesn't matter, or whatever charts you find. You can also go on
Yeah.
Yahoo Finance and find some tweezers in it doesn't matter, any index, any field, even if you want to do stocks, doesn't matter to me. Find some tweezers, find some 3-bar reversals,
Okay. Yeah,
and
for sure.
just start marking up your charts, especially whatever you think you're going to be trading when you're in the room with us, or any stocks that you find to be helpful in your personal space. So yeah.
Okay. No, that sounds really good. I have time throughout my day, or like at the beginning of the day, the beginning and the ending of my day.
Yeah.
I actually do drilling for a couple other projects, and the concepts that you're presenting with respect to basically the candlestick patterning, and going through and sitting down and do that is fine. I have some poker software that I drill through, some other stuff that I do some drilling through for learning and internalizing, exactly that. So this is actually totally awesome. It fits directly in the model of some other things that I'm doing as well.
Cool. Great. Yeah. And then if you do you have any other questions right now? And if you don't.
Yeah, if I could just maybe just like an extra, like maybe like 5 minutes of your time, could we
Sure.
just go through, and this kind of relates to things that you throw into chat. Since this is conceptually like day one, day zero, for me, could we just go through acronyms that you're putting in chat?
Oh,
Obviously,
sure.
the market indices. My only concern is I don't want to be lost in the nomenclature.
Yeah, definitely. So do you have like a pen and paper?
You know what? Just go ahead and rattle it off, because in terms of the learning mechanic and the recordings, as
Uh-huh.
long as the recordings come through, no problem. Because I'm actually going to go sit back down and basically take this like an academic course. I'm actually going to rewatch this at slower
Yeah.
speed, and I will write out my notes by hand on paper so that I go through the physical action of writing them out to internalize the knowledge.
You're such a good student. Yeah. So the acronyms when it comes to like the what we're trading, correct?
Correct. Yeah.
Okay, yeah. So in the futures market, first of all, you have to use a backspace if you see it here. So before you put in, like when you put in a stock, you can just put in the symbol like Apple, AAPL. But when
Right.
it comes to futures market, you have to put in a backspace, and then you can put in the lettering. So GC is gold.
Okay.
And I may be able to like send a thing on this, and then but actually, when you're in Tradeovate, you don't have to use a backspace, but I
Okay.
can't remember where else you have to. So sorry, I don't want to confuse you with that.
No, no problem.
CL is it's light sweet crude oil.
Okay.
So we just call it oil, but it's crude oil. So that's CL. ES is, and I guess the E is just for the E mini, but it's the S&P 500 index.
Sure. Okay. Yep.
And then the NQ is the NASDAQ. So it's the E mini NASDAQ. There's no E in there.
Okay.
And so mini just means, and that's another thing is I didn't really know this before I started trading futures. So you could trade the NASDAQ on like the full market, I'm pretty sure, or you could at least have an ETF. So you could have like ETFs of the S&P 500 or the NASDAQ, but it's so expensive to actually trade it that's why I think futures were created. So the E-mini is a mini version. Even though we're trading at the same price, we're trading the same action that's happening either in the
Right.
NASDAQ or the Dow. Like I don't trade the Dow, but the Dow is an option. Obviously, you can trade, or the S&P 500. That then futures were created to say, hey, and this is another thing that I'm sure a lot of people aren't aware of. A futures contract, and that's why it's called a contract, is we're actually betting on what is going to happen in the future. So the contract we're in right now for futures, like if you see right here, that's what the lettering. So when you go into like Tradeovate and you type in NQ or you type in ES, it's going to give you the current month that we're trading at. But you can actually, and what that means, I don't want to like get too confusing. What that means is we are trading for the future. So what we're in right now is a June contract of 2020. And there are other ones that are available. Like you could do September now, I think if you wanted to, but there's going to be nobody trading in the September one. Or you could do June of 2021. And all it means is that we're saying, do we think the NASDAQ, oil, gold, do we think they're going to go up or go down by the time this futures contract expires in June of 2020. But
Okay.
that's more for people that are holding long term, because really we're in and out every day, so we don't care.
Okay.
But that's what a futures contract is the futures were made to help more commodity people. So like when it comes to oil or like corn, like people that harvest corn, because you can trade corn on the futures market. You could trade orange juice. Like there's so many weird things that you can trade. Coffee is kind of popular.
Yeah.
So you can trade those, but what they're essentially for is to help the harvesters and the people that actually like manage these companies and grow them, that they are having money put into their sector to then say where they think it's going to be in the near future. So
Okay.
that's kind of, I guess, why future started. But when it comes to the indexes, that it's not affecting anything. We're really just saying, and you could hold it until June. So I don't know if you've ever traded options before, but like with options or with futures, you have to be out by the time it expires. Or like with an option, then if you've done well, then you own that share of that company and you're getting it at a discounted price. But with futures, you're literally just taken out. Back in the day, if you say you were trading corn and you forgot to get out of your futures and you had traded 10,000 bushels of corn, they would literally ship them to your house.
Hilarious.
Yeah. People would start getting oil tanks delivered to their house, and people are like, what the fuck? I don't want oil. I just wanted to trade it. So now brokers have taken it upon themselves to actually get you out of the trade before it expires. So like
Okay.
if you held it to whatever the last day that they even allow, I don't even know. It's usually like the third Friday of that month. So if you held it to the third Friday in June, your broker would just take you out. They like wouldn't even let you, like by the end of the day, they would take you out of that trade because they know you don't actually want that, and they're not sending you like bushels of corn or coffee or whatever.
Hilarious.
Yeah, it's crazy. So I know I've heard these stories over the past year, and I'm like, that's insane. But so it's something to know, because I will have to like alert the room, like when we're no longer trading the June one, like once it starts to become the first or second week in June, we're going to have to move over to the next contract, because you just, number one, you don't want to get tied up in it, but then also everybody else is moving their buying and selling over to the next contract. So that's where all the action's going to be.
Okay.
If that makes sense.
Okay.
I hope I
So
didn't confuse you with that
no,
stuff.
no. I think that makes sense.
And the letter, so they use, I don't know, you can Google it, but like the letters, so for June it's M. I don't know. And then for like other, the months are like some weird letters, and then the 20 is just the year.
Oh, I see.
Yeah. So the M is for June. I don't know what September is, but with the indexes, they do they do it quarterly. So they do 4 a year, but for oil and gold, they do it monthly. So you'll see that we have to change pretty much, because I think right now, oil is in K. So so K is for May. I don't know why. But that's what we're in right now for oil. And then these are all the future years. But yeah. I don't even remember. Oh, did I explain all 4 of the ones that we trade?
You did, yeah.
Okay.
You went through and
If you have others, if you go on the Tradovate website, just the regular website, and you go under margin, which is where I was kind of trying to show people to see how much it would cost just to take one lot of each of the things that I call out in the room, because like I said today, gold is pretty expensive. So some people are just funding their account with $1,000 or $500, whatever. But gold, to trade gold, you have to have $4,500 in your account to take that trade. So so those are listed on the Tradovate website. They're like the day margins, and they might go down soon. They were just raised because of all of the COVID stuff. So they should be going down. Like S&P 500 and the NASDAQ right now are $1,000 for the mini contract, but normally they're $500. So that's half price, so hopefully those will be going down soon. So then most people can take the mini instead of having to take the micro. So then you can make more money off of the few trades that we are doing each day.
Okay. That makes sense.
But but so also what I was saying is when you go on to Tradovate under the pricing tab and then the margins or whatever, and you can see the day margins, it will show you all of the symbols and the names of them. So every futures that you could trade on Tradovate, they have them all listed there. And the symbols and then the name. But
Awesome.
Cool. Anything else before we wrap it up?
No, those are gonna be the main items. It definitely gives me some homework to go in and start working through from a practicing standpoint to develop a technical skill. I do think I will need to spend time, and on my other monitor over here, I have the Tradeovate platform up too. So I want to make sure that I understand just what all of the screens are doing, so to speak.
Yeah.
And then how best to use them. I did find their YouTube channel that just had some.
They have a YouTube. Yeah, they always
Okay.
sent me to that when I first started. I was like, okay.
Okay, yeah, they have the YouTube that's just gonna show me through the mechanics. So, yeah, no, this definitely is a step forward. I think from a just from a education standpoint and developmental, I'll make sure to integrate in my daily routine that I'm basically practicing, so to speak, with respect to the spotting of how the charting behavior or the chartist behavior works, and then maybe just kind of reaching out saying, hey, is this correct,
Right.
and then once I get a little more practice in, we can move to step 2.
Perfect. Yeah. So let me know if you have questions along the way, but I'm fine doing, a session once a week. If you want to connect more than that, I'm fine with that too. Most nights that I am free are Monday, Tuesday, Thursday, because my son is with my ex. So those are the easiest just because he's not, running around asking me things. But also, like, if one of those nights don't work, we could always do a night that I do have him after he goes to bed or something.
Okay.
But we will move forward. But yeah, let me know if you have questions when you're doing any of your homework or along the way. Obviously, we're going to be in touch. But like I said, I'm going to post in the chat that the markets aren't open, obviously tonight or tomorrow, because 6 p.m. starts the new day. So that includes tomorrow. So it's not open tonight. And then we'll have the weekend. So we'll start back up in the chat room Sunday night because the markets open back up Sunday at 6 p.m.
Okay. Awesome. No, looking forward to it.
Cool. All right. Thanks, John. It's a pleasure. And I will start your file in the Google Drive and I'll link you to that. I'll send your email to it. Okay.
Awesome. Talk to you soon then.
Thanks.
All right. Bye-bye.